Welcome to Finance Made Easy. 3 days before the start of the semester, I introduced the 3 core principles of finance: time, money, and risk. These are the first steps in building your financial worldview. Today, I want to continue on this topic and discuss 2 things. 1. What exactly is a complete financial worldview? 2. How can we build this worldview over the course of this year? First, let me explain what a complete financial worldview entails. It consists of 2 key aspects. On one hand, you need to recognize the power of finance. On the other hand, you also need to be aware of its negative effects. In the past few days, we've already discussed in detail how finance empowers us humans from the dimensions of time, money, and risk. Finance can help us manage time, pool capital, and spread risk. These 3 abilities are what we call the 3 core principles of finance. But from a different perspective, could these powerful abilities of finance also lead to negative effects? Of course they can. There are many criticized financial phenomena in society, with 2 of the most well-known being the Matthew effect and moral hazard. Matthew effect. Finance can amplify the accumulation of wealth in society by hundreds of times. The problem is, this power is not shared equally across society. As the saying goes, people rise to higher places and water flows to lower places. Money works the same way. It naturally flows to those with more initial wealth or power. The greater the leverage in finance, the more pronounced the rich get richer, poor get poorer Matthew effect. A strong example of this is seen in the past few decades. With the development of global financial markets, wealth disparity in society has been growing. For instance, in 2012, 42% of the wealth in the U.S. was held by the richest 1%. In China, this figure may even be more extreme. Moral hazard. Since finance is connected to the future, and the future is intangible, financial markets inherently suffer from significant information asymmetry. The enormous temptation of wealth, coupled with great information asymmetry, amplifies human greed and desire. Many individuals take advantage of their information advantage to gain illicit wealth. For example, during the 2008 global financial crisis, many people on Wall Street knew that the subprime mortgage products were of very poor quality, but they didn't care. They just wanted to keep the game of hot potato going, selling off these products. They used complex financial models to package and deceive investors. Ordinary investors were especially vulnerable to falling into the moral hazard trap. We've just discussed the concept of a complete financial worldview. On one hand, you need to recognize the power of finance and learn to make beneficial investment and financing decisions at the right time. On the other hand, you must be aware of the negative effects of finance and avoid the pitfalls of the Matthew effect. To achieve this, having just concepts and frameworks is not enough. You also need to acquire a solid foundation of financial knowledge. This is actually the core mission of this course, to bridge the gap in financial knowledge in our society using a simple and clear approach. To this end, I've divided these foundational knowledge points into 6 sections, which I refer to as the art of finance. Over the coming year, I will deliver these financial concepts to you bit by bit. Financial institutions. First, I will introduce you to financial intermediaries. In this section, you will learn about the origins, functions, operating models, and the underlying financial principles of financial intermediaries like banks, investment banks, and funds. Financial instruments. Next, I'll show you how financial institutions expand the market through financial instruments. In this section, you will learn about the nature and characteristics of stocks, bonds, and financial derivatives, their application logic, and related financial transaction systems. Investor decision-making. After understanding financial tools and institutions, we'll move to the investor decision-making section. Here, you will learn about asset allocation, security selection, and irrational decision-making. For example, How to decide on your investment direction based on your own and your family's risk tolerance and income level. Whether to choose Tencent stock or Mutai, given a certain investment budget. How to choose the right money market fund among hundreds of options and how much to invest. You'll also learn how to overcome your human weaknesses like panic and fear in investment decision-making. Corporate decision-making. Next, we'll dive into corporate decision-making. We will discuss when and why businesses should choose different fundraising methods, such as bonds or stocks, and when it's best to go public. After making profits, should a company distribute dividends to shareholders? If so, how much? As a business owner, should you offer stock-based incentives to your employees? If so, how much and how? We'll also explore how to resist the pressures of mergers and acquisitions in the market. Financial regulation, innovation, and crisis. After covering the above sections, we'll enter a more advanced stage of learning where we'll examine the financial cycle in terms of regulation, innovation, and crisis. Why do financial markets need regulation? Why do financial institutions engage in financial innovation? Why is innovation and regulation like a game of cat and mouse that leads to financial crises? How do these financial cycles affect our lives and investments? Fintech. The last section is focused on the hottest topic today, fintech. Here, we'll discuss the future of the financial industry. For instance, how the internet has blurred the boundaries between finance, commerce, and social interaction. We'll also explore whether new terms and products like blockchain, Bitcoin, and digital banking will change our lives. In the age of artificial intelligence, will human credit relationships be reshaped? More importantly, what will the future of finance look like? You will find the answers to these questions in this section. Once you have completed these 6 sections, you will have a solid understanding of the structure of financial markets, and your financial worldview will be a well-built foundation. Finally, I'll help you elevate this knowledge to the level of Tao, enabling you to apply financial thinking to all aspects of life: career, education, entrepreneurship, marriage, family, and daily life. With financial thinking, you'll become someone who balances risk and return exceptionally well. In financial terms, you should be not only a value investor in your investments, but also a value investor in your life. After the 2007-2008 global financial crisis, public resentment towards financial speculators reached its peak. Media and politicians severely criticized the financial system. For example, former French President Sarkozy said, "The financial system is essentially irresponsible and immoral." Former UK Prime Minister Blair also stated, "The financial system has deviated from its essence and can never return to its true nature." Based on your understanding of this week's course, how would you comment on Sarkozy and Blair's statements? Feel free to share your thoughts in the comment section. This is Finance Made Easy, helping you gain a higher perspective and re-understand wealth.